Nasdaq 100, which was the underperformer in the year 2022, has given a massive 50% and more returns in the year 2023. See, it has started the year at 11,000 levels and closed at record highs. Now, can we expect Tech 100 to yield similar returns in the year 2024, or is it going to crash from the current levels? What is going to be our strategy? What to expect in the coming year 2024, in the month of January, and in this week? We will see with the help of charts and indicators. If you're new to the channel, subscribe to the channel to get the latest updates. I do share twice a day update on Nasdaq 100, first with the Asia session and next with the US session. Do watch both, do subscribe to the channel and become a channel member as well. Let's start. Yes, towards the end of this analysis, I'll give you the trading levels and strategy and the long-term view for Nasdaq 100 in the year 2024. Do watch till the end. First, let's have a look at the monthly charts. On the monthly charts, it is consolidated here in the end of the year 2022, and since then we have seen Tech 100 just yielding higher highs. Look at the now, first thing to notice is Tech 100 is trading in this expanding triangle here. Yes, this is a bullish channel. Yes, this is a bullish triangle. And the highs in the year 2024 are far, far above. Yes, but can we expect it to move towards this zone, or is it going to trade sideways? Now, one thing you must note that on the downside, we have to be very, very careful. If at any point of time prices fails or falls below 15,000 levels, that is the point of time we can say that the bears will take over, and then we can expect more fall. And then one must look at first support level. See, after the retracement, 3 candles retracement, it has found its support here at somewhere close to 14,400 levels. Since then we have seen a rise. Now these levels, first 14,000, 14,400, then 13,000, but is it possible for it to crash towards those levels? Let's have a further detailed look. See, now look at the last 2 candles. One very big bullish candle, second candle almost half the size of this candle, and it is still bullish. We can still expect the third candle in the month of January. Yes, we can expect a third candle. This could be a potential or possible swing candle where the highs could be somewhere here at around 17,000. First resistance 17,250, 300 zone, and then once it breaks beyond this zone, I will look forward to another 500 points, which may take Tech 100 closer towards 17,700, 800 levels. Remember, it is already trading at an overbought levels. It is already trading in an extremely overbought zone, but not on the monthly charts. On the monthly charts, it still has a scope for it to yield third bullish candle or a swing candle at least. Now, this candle could be the stepping stone for couple or more bullish candles. What we have seen here can get replicated, because see what has happened here. It has straightly yielded 4 to 5 greener candles, then 3 retracement. Now we can expect 3 to 4 greener candles from here. This is the next wave which is continuing. But if you look at the indicators, what will look at the 20 period moving average is at 14,000 and the 100 period moving is at 10,000 levels. Massive gap, and the prices are trading with too much of deviation from these moving averages. Yes, it is still showing bullish signs, and thus 14,000 is the level which is going to play a major role in the coming months for Tech 100. Also, one must note, since the financial crisis of 2009, 2010, Tech 100 on the monthly charts has never crossed over below the 20, 50, 100 period moving average, or you can say the moving averages have never crossed over. See, these are continuing to diverge. Also, one must note, look at the divergence here. Maximum divergence was seen same levels close to 14,000, and this time it was at 9,000 levels. Right now it is a bit lesser compared to this divergence, and the divergence of the price from the moving average is almost the same. Thus possibly the next candle is going to be a swing candle, and from those levels a retracement can be expected, which means that it can scale to fresh highs beyond 17,000, 17,200 levels, and it can try to fall. Yes, a drop can be expected here. It can continue to trade in this bullish channel. The support levels are going to be seen here at around 15, but this is only going to be seen in next 2 to 3 months. Now let's have a look. See, the monthly stochastic, which was traded overbought, it has dropped and now looking upwards, which means in the January month we can still expect another bullish candle or a series of couple or more bullish candles before it looks over to any downside. Look at the MACD. MACD is also divergent. MACD is bullish looking upwards, and one must note that after a series of bearish candles, in 21-22, we have seen this crossover happening and it is now looking upwards, which suggests that MACD can still continue to trade on the upside. That also suggests that even if it tries to move on the upside, or uh, even if it tries to trade sideways, we can see the MACD rising. That is what we can look at, and thus the momentum is going to be moderately bullish for the next few months. RSI rising, and if you look at the now one must note the look at the volumes here. See, volumes on the sell sides are extremely higher, while you can note that the buying volumes are comparatively lesser. Does it suggest that this rise is not supported by buyers here? Now look at the weekly. On the weekly charts, too much of divergence of the price from the 20 period moving average and from the median of the Bollinger Bands. Also, the prices are trading at the outside the Bollinger Bands. Yes, now the 20 period moving average and Bollinger Bands median is at 15,400, 15,600 zone, almost 1200 to 1400 points away from the current levels. Also, if you notice, the candle size has diminished, and this could be the potential reversal sign from where the prices might continue to trade on the downside. But the recommendation of bearishness, or the real bearishness, is only observed if you see the price is staying below 16,550 levels. That is the level you should watch out for. Below 16,550 is where the bears will take over in the coming week. If you see the price is staying below 16,550, certainly we can say that Tech 100 has turned bearish. Now I am just observant of the last candle here. Certainly this could be the reversal sign. I will wait for a break below. In fact, even if it trades below 16,700 and then 16,550, these two levels you should watch out for. Below that, certainly one can say that we will look forward to a massive bearish move, which can take the prices first towards 16,000 and then towards 15,600, 400 zone. Look at the stochastic on the weekly charts. Extremely overbought, running flat here and to the extremes. Thus, it calls for it to retrace, and once it starts to retrace, it is going to hit to the oversold levels. Look at the MACD. Now, MACD, if you look at, these were the extremes which MACD has seen, and recently we have seen it entering to the overbought zone. Since then, we have seen a little retracement, and now it is again looking upwards. It is divergent, it is bullish, and it is not showing any signs of a drop. But remember, drop, retracement, and a crossover here will bring bearishness in Tech 100 for the next few weeks from the current level. Thus, next 2 to 3 months is what you should be cautious of, watchful of, and potentially we may see a little retracement in Tech 100 before it looks forward to an up move here, or it may try to trade sideways. Yes, a possibility of a sideways movement also exists. RSI again entering into overbought zone. The volumes here are consistently green, and we can see the greener candles as well. Coming to the daily, on the daily charts, you can see there was a gap at the beginning of the week, and we have seen a reversal. After that, we have seen prices filling the gap here. Also, we have seen higher lows, higher highs. Thus, only bearishness. Yes, if you see, the price is first staying below 16,700 and then 16,550. These are the two levels you should watch out for. Below this, we can expect further drop. See, the moving averages, 20 period and the median here sitting at around 16,550 levels. Certainly a greater support here. And below this, if it stays below 16,500, 400 levels, I will expect Tech 100 to move towards 16,000 levels. Now, the next destination is going to be 16,000 to 15,800 levels, greater support. Also, look at the divergence of the moving averages. 15,600 is the 100 period moving average, and 16,600 is the 20 period moving average. Almost 1,000 points of divergence. Too much of divergence calls for it to converge, and in fact, too much of divergence of the price from the moving average calls for it to converge. What has happened here can get replicated again here, but this time I will expect it to at least move towards the 50 period moving average, which is slightly above 16,000 levels here. Thus, in the next few sessions, we can see slight bearishness. Stochastic looking downwards here. Look at MACD. See, it has retraced here. Now it is on the verge of a crossover, and this crossover may certainly take the prices. Look at the highs on MACD, almost at these levels. Thus, any high, if you are seeing in January, is an opportunity for us to sell more. Possibly 17,000, 17,300 is the zone from where we can take a sell entry and hold the position towards first 16,000, 15,800, and then 15,400, 600 zone. Almost you can get 1,000 to 1,500 points in the next couple of months. That is my expectation. RSI is certainly overbought. It is looking downwards. And if you look at the volumes on the sell side have certainly diminished, though the buying volumes are also comparatively less. Thus, now we have seen the charts, we have seen the indicators. Time for me to give you the summary of the observation, the trading levels, the strategy for the January month and for this week. Before I give you the trading levels, if you want to learn this art of trading, you can join my 28th mentorship batch starting second week of January. Equip yourself with the tools, techniques, and strategies which can help you identify profitable trades and help you trade profitably with confidence. Reach out to me for more details or visit my platform www.forexfunda.com. Yes, this platform has much more to offer, be it the economic calendar, be it the charts with the indicators and advanced tools, or the community there where you can discuss with the fellow traders, and also you can book a consultation call with me if you need any guidance with respect to your existing trades or a future prediction. Also, there is a webinar series which we conduct every Sunday where we take holistic view of indices, commodities, currency, and volatility index, and also we take up your live questions. This comes with 2 free sessions with me. So do register for this webinar series. Visit the platform forexfunda.com or get more details from me by visiting or joining my free Telegram channel. Yes, you can also be part of my Signals channel on Telegram. First, let's talk about the levels to buy. In the coming week, if you see the prices staying beyond 16,850, we can expect that we will look forward to 16,880, 920 zone. This is going to be a major resistance zone. And if it breaks beyond this, I will look forward to 16,970. And then certainly there should be a break towards 17,020 levels. If it stays above 17,020, I will look forward to a further rise. But remember, as I said, it has got maximum resistance here at around 17,250, 300 to 17,000 zone. Thus, any rise, any move towards this zone should be an opportunity for us to enter the smaller sell positions so that we can hold it for a little while. Now 17,001, and from here we can look forward to 17,210, 17,255 and 17,300. Now I still expect Tech 100 to move on the downside achieving these levels. This could be a probable high, and thus for the next couple of months or more, possibly the highs which Tech 100 is going to achieve this month is going to remain the high. That is what is expectation. However, on the monthly charts, there is still possibility for Tech 100 to show more of a sideways movement and bearish sideways, I will say, where we can see lower highs, lower lows getting achieved, which means that the prices might not be falling to such an extreme that it cannot move up again. And that is why 15,800 to 16,000 levels and 15,400, 600, the next zone, are going to play a major role, below which only further bearishness towards 15,000 to 14,000 levels can be expected, though the chances appears to be less that it is going to happen in the next 2 to 3 months, though yes, a little bearishness can be seen. But now where to sell? I will recommend you to sell first here at 16,760. Expect 16,695 as the first resistance. If the price stays below this, you can look forward to 16,620, 16,555. Now once you see prices staying below 16,555 is where we can expect more bearishness. Though below these levels, I will expect 16,200, 16,000 and then 15,800. Now below 15,800 is where further bearishness. Now almost every 200 points we have seen it getting the support there. Thus, this range is also applicable not only for the month of January but for next couple of months, where the prices might try to move towards the zone yielding lower highs, lower lows. And yes, in the month of January, the highs it is going to achieve is going to remain possibly the highs for the next 2 to 3 months before it looks forward to an upward move. Take your trades accordingly. Do watch the daily updates. Do like, share, subscribe, and comment. And yes, regarding the long-term move for Tech 100, I expect that first half possibly is going to trade sideways with modest bearish bias, and second half is going to give the major move, and which can possibly be on the downside if the prices stays below 14,000 levels, or rather I will say, in fact, even if you see prices staying below 15,000 levels, we can say the Tech 100 in the later half of the year is going to deliver major blows, and then we can look forward to 13,000 levels, though the erosion from 17,000 to 13,000 is almost 25, which is not impossible. But yes, for Tech 100, these levels are certainly going to play out well. We have to be careful with the trade trades here. Yes, only below 15,000 and 14,000 levels, we can say that the bears will completely take over. As long as these levels are respected, chances of a reversal will be very, very high. Take your trades accordingly. Like, share, subscribe, and comment. Follow me for daily updates and weekly reviews on Tech 100. Twice a day updates are there. Thank you very much. Do join my mentorship batch, Signals channel, webinar series. Visit the platform forexwonder.com or join my free Telegram channel. Thank you. Have a great profitable trading week ahead, and a happy new year and a profitable new year ahead. Thank you.